Fixed rate mortgages accounted for 75% of mortgages drawn down in the last 3 months. So if you're taking out a mortgage, should you be looking to fix or stay variable, and what are the costs and benefits associated with each? So I'm hoping to go through that and just look at if you're a mortgage holder and looking to switch, or if you're somebody who's looking to take out a mortgage, should you be considering a fixed rate, and why are most people considering a fixed rate right now? So the main key point is that fixed rates currently are lower than variable rates. So what that means is if you're looking at rates and you're comparing the cost of mortgage finance and I suppose the cost of repayments, you'll see that fixed rates are lower than variable, particularly on the 2, 3 and 5 year fixed rates that are on market at the moment. The lenders have reduced fixed rates over the last 6 months, and hence the differential. So should you be fixing? So fixed rates provide security over repayments. So you know how much you repay each month throughout the fixed period. The downside is that obviously if rates decrease, your rate will remain the same. Also, some of the downsides would be that you can't overpay in general when you're on a fixed rate. So some lenders will allow overpayment, and this is the key point to understand. If you're choosing a fixed rate and feel you have the means to overpay, you really need to understand if your lender will offer overpayment options, or if you perhaps need to split your mortgage and go part fixed and part variable and then overpay on the variable element. Another consideration with fixed rates is if you could have a penalty. So a penalty can apply with a fixed rate if you break out that fixed rate contract. So for example, if you've decided to fix for a 3-year period and 2 years into that mortgage you say, you know what, I want to break out of this, or I want to overpay and I don't have the means to do so with my particular lender, or I'm moving house, or it just didn't work out, then you could have a penalty if you break out of the fixed rate contract. And that's based on the cost of funds to the bank when you lock in versus when you break out, multiplied by the amount of term left on the mortgage, multiplied by the mortgage amount. Big calculation. Sounds I suppose more technical than it is perhaps, but you can't understand what that would be right now. It would depend on the cost of funds at the time of breaking out. The main thing is to be aware that fix only for the period that you're kind of fairly certain that should be a reasonable period of time and that you won't be making any changes to your mortgage, because if you break out of that fixed rate, you could have a penalty. So fixed rates are low and they're tiered by loan to value, but with most lenders. So generally the lenders tier their rates by less than 60% loan to value, 60 to 80 and greater than 80% loan to value. The lower your loan to value, the lower the rate. There's some really good fixed rates on the market from the main lenders, and also the introduction of Avant Money this autumn should mean that there's some lower fixed rates coming to market based on their advice so far. So a good time to fix. Be conscious of what you're signing up for, in that it's a fixed rate period. There can be a penalty if you break out of it. You know what you're paying each month. You don't always have options in relation to overpayment. So it's really important to understand if your lender will allow you to overpay. If they do, it has a massive impact on the overall cost of credit. So being able to overpay, while it might seem like, you know, a hope and a dream more than a reality at the start of the mortgage, it's really something that has a massive impact on the overall cost of credit on your mortgage. So something everybody should look to do. Those who have mortgages and who are on variable rates or rolling out of a fixed rate should really be looking at market and switching if their lender doesn't have competitive rates. So that's a really important point. Understand what rates your lender offers, what rate you want to move on to next, whether it's fixed or variable or a split rate, and then find out what's the best rate for you on market. At Doddle, we offer 7 lenders under one roof, so we have access to all lenders' underwriting policy, all lenders' rates, and it's the same rate you get by Doddle as you get by going to the lenders directly. So if you have any queries in relation to interest rates, fixed or variable, or what's best for you, then be sure to give us a call at Doddle.